My name is David Caldwell. I'm a principal real estate broker with Hillshire Realty Group in Portland, Oregon. We're going to be looking today at a video with Robert Refkin. He's the CEO of a great real estate company called Compass, where he had made a prediction that sales volume, meaning the number of homes selling, had hit a low in Q4 of 2022. So moving forward to 2023, he's predicting a rebound. We're going to compare and contrast that to what's happening today in the Portland metro housing market.
Welcome to you. You still feeling confident in that call?
I'm still feeling confident in the call. In December, pending listings that had accepted offers were down 40% year over year. And in every week of January and every week in February since, we saw an increase in listings that had accepted offers week over week over week. And in February, prices were actually higher than in January.
So if we look at that for Portland, Q4 versus Q4, 2022 versus 2021, pending sales were down 42%. Now going into the beginning of the year, what we've really been paying attention to in the Portland metro housing market is what's happening with new listings. And if you look at December 2022 through February 2023, new listings versus the same time last year, we saw a decline by 26%. And that certainly meant that there was a decline in pending sales as well. The silver lining is that we only had 95 fewer homes go pending than the total number of newly listed homes for sale in the last 90-day period.
Interesting. We also did see mortgage rates come off those highs from last fall, and now we're back at those levels again, though.
Yeah, so I would describe January as a frenzy. People were saying that it felt like it could be the pandemic period all over again. Since then, mortgage rates have gone up.
So in Portland, we didn't really experience that. In certain price points, we're seeing that. If you're sub 500,000 in the Portland marketplace, it's actually pretty likely you're going to see a multiple offer situation. Multiple offer situations are a completely normal thing in every housing market. We saw it in 2012. We saw them in 2010. We saw them in 2018. We saw them in 2021. We're going to see them in 2023. Additionally, price reductions, which we're seeing frequently, are also a completely normal part of the housing market, but I wouldn't consider our January in Portland a frenzy.
The frenzy's over, but we still see multiple offers, more foot traffic, and more buyers and sellers.
It seems like we've got this tug of war between affordability and inventory, right? Like, yeah, the prices are way higher than people want, but the inventory is so little that you got to do something. Are jobs at the center? If people start to lose their jobs, does the housing market then have to buckle one way or the other?
If people lose their jobs, the wild card will really be what happens to rates. Because if people lose their jobs, then the Fed could bring down rates. And if rates go down and you have mortgage rates back to 6 and 5.
But doesn't the Fed want people to lose their jobs?
The Fed has a very difficult challenge.
Jerome Powell has said he wants people to lose their jobs. Jerome Powell has said he wants to bring the housing market, kind of like slow this frenzy down and actually bring housing prices down. If you look at the big employers we have in Portland, they're not reporting layoffs. We still have a very low unemployment rate in the Portland metro area and in the US market just in general. One thing, we say this all the time, but in the last 26 of 30 years in the Portland housing market, we've seen price appreciation. And when we Google all the horrible things that have happened in 30 years, you would think there'd be many years where home values declined. But we've seen an average rate of appreciation over that 30-year period, 26 years of appreciation, 4 years where values declined. The average rate of appreciation over that time is 5.8%, meaning the average home price doubles about every 12 years. So we're watching unemployment, certainly. What's more concerning to us is the amount of listings that are coming to the market represents a 30-year low.
They want to bring down prices, and they're raising rates to bring down prices. But as they raise rates, mortgage rates go up, and more homeowners, 85% of homeowners have mortgage rates below 5% today. 28% of homeowners have mortgage rates below 3%. They consider it a financial asset. So the higher mortgage rates go because of the Fed's action, the less homeowners want to sell because they don't want to lose that financial asset and move it over to something with a 7 handle on it.
So we totally agree with that. We're going to put a graphic on the screen that outlines the 85% of homeowners that have a mortgage rate 5% or less. We're in a marketplace where if you can afford to move up into a better home, it increases your quality of life, the payment makes sense. It makes sense. But for a lot of people, they are either unwilling or unable to reach into some of these higher mortgage payments and higher priced homes. So you're seeing less homes come to the market. And this could be something we deal with for the next 12 to 24 months, depending on what we see with mortgage interest rates.
And so then there's less inventory, still the buyers are there, and that's what's creating more price appreciation.
So you don't think that home prices are going to fall much further than we've already seen in certain markets? Is that what you're saying?
I don't believe home prices will fall much more. We went from January last year from all-time low mortgage rates to a 20-year high in mortgage rates in 9 months. And in December, that trough month, you had prices that were still up 6% year over year, down 4% from the spring 2022 peak. But we have since seen prices moderate up just a little bit. And you have analysts for the first time in 9 months saying that prices could actually appreciate this year.
So let's talk about the opportunity for home prices to fall. If we look at the 2022 housing market in Portland, about 30% of the homes that listed for sale did not sell. What Robert was just talking about was the price of a mortgage basically doubled. We saw rates go from 3% to the upper sixes. Prices didn't fall. We had talk of a recession. We had really, I think, all-time pessimism on the housing market, and home values did not fall. And when we look at the last 12-month period, the average price of a home in Portland is up 5.4%. Now, we are reporting lower closed sales prices for specific months like January and February, and that could be the beginning of a trend, but also it speaks to a lot of the homes that actually are selling, the homes that are coming off the market are the more affordable homes, and you're just seeing people in the higher priced homes, instead of reducing the price of their home down to a level where it'd be saleable, they're just staying there, and they're staying there with their low mortgage rate.
So just quickly to bring this around then, what does that mean in terms of your own hiring? Because you were very aggressive in terms of recruiting real estate agents. Have you been not as aggressive? Is the market looser from that standpoint?
So we don't need to hear what's going on with Compass as a real estate company. But what I would encourage you to do if you're thinking about being a home buyer or a home seller, you're thinking about entering the market, get in contact with us. We'd love to do an analysis for you on your home or what's happening in a specific area. If you want to see more videos like this, analysis on the Portland housing market, what's happening, home tours, make sure to like and subscribe to our channel, and we'll see you next time.